when you're dealing with investors, you just can't take any investor. There's a process and a type of investor that you could deal with. Can you talk a little bit about the accredited investor profile? And this isn't for everybody, right? This is for a specific type of investor who has a risk tolerance that can withstand a total loss, really.
Yes.
So how do you approach an investor? How do you find your investors? How do you vet them?
Yeah. So you
don't take anybody.
We don't take anybody. Usually the investors we started with were all investors we knew. So they were, I'll call them ultra high net worth is what we started with. And then we got down to what I'll call high net worth. So most of them are people we know or friends of people we know. And how do we vet them? We literally walk through a KYC with them and know your client and understand where their assets are, how much money they make, and can they afford to lose it.
So very similar to
the mortgage industry, exactly.
Yeah, they have to be accredited. They got to make sure they understand they could lose everything.
Yeah, I would say to you, in our case, we're probably a notch above the MIC in terms of a risk that you're taking on. But that's why a portfolio is very important. A lot of people want to buy into small businesses, and they'll say, "Well, I can go do what you do. I'll buy into that camera business that we were talking about." Well, A, you got to get that opportunity. And B, if that's the only one you do and it's the one that goes sideways, you're in trouble because you're going to lose your money. Whereas if you buy a portfolio of 12, the math says 2 are going to go sideways on you. 2 actually might go bankrupt, but the other 10 should do well for you. So as a portfolio, you're going to do really well. And so that's why I tell people, don't go looking to do these on a one-off basis. Actually, if you're going to do it, pool it. Pooling is very important, just like it is in the MIC industry.
You basically spread the risk.
Yep.
All right. It's more like a mutual fund. Would probably be the best example that someone could kind of relate to. Now, the last part of the exercise is the exit. You have to sell these things or you got to find a buyer. How difficult is that process? Or is there a pool of mid-market investors that want these businesses that have now been turned into something more valuable because your whole game plan is to increase revenue, increase EBITDA to a level that they're now attractive to be purchased? How's that process and how does that work? Is that something that there's a whole group of people waiting on the sidelines for these businesses to mature and take on and kind of tuck into a conglomerate type investment? Like, how does that all work?
So there's probably 3 things that we do because we're very active in our portfolios in terms of looking for exits. The first one is we are always looking for who's the big guy in the industry and what are they doing and are they acquiring? So Home Turf, prime example. There was 2 big acquirers in the industry. They were consolidating the industry. John, my partner, and I sat down and we said, let's reach out to them. Let's tell them that, hey, we exist, because they don't know we exist. So that's one way, is making yourself very visible that you're out there. And secondly, to that point, if you're owned by private equity, they know you're going to exit. So those are kind of the first things we do. The second thing we do is we try and make ourselves visible to investment bankers. And so there are some really, really good mid-market investment bankers. And primarily we try and use US investment bankers because they definitely have a bigger scape of the amount of people that are out there. They actually scour the earth to find the right buyer. So in the case of Voxco, really good asset, they scoured the earth to find the right buyer for that asset. Something, not to put down my Canadian brethren, but I don't think they would have had the reach to do. And then the last piece is we actually do keep in touch with a lot of private equity firms who say to us, hey, what do you got on your portfolio? Let me see it. I want to know what's there, right? Because they know ultimately we're going to exit. And many of those investments will serve as one of 2 things. Either A, a platform for something they want to build much bigger because they know we don't have the money, or B, it's an add-on to what they already have. And so we do a lot of reach outs to PE firms, and we actually encourage the searchers, go to the conference for your particular industry. Don't shy away from meeting people and tell them, oh, it's a private company. You actually are a private public company. You need to sell. So make sure people know you're out there and make sure that they know you're going to be for sale at some point. And if they want to come early, we're always willing to listen.